Global equity markets were flat in September as investors took a break after the summer rally. The MSCI World was flat, 0% in September, after having delivered a 4.5% performance for the third quarter. Meanwhile, key central bank meetings in September fueled volatility in bond markets, though in the end, global bond benchmarks were also flat in September. Such market conditions impacted hedge fund strategies differently. On the positive side, event-driven managers outperformed, and merger arbitrage players in particular, as strong M&A volumes, the tightening of deal spreads, and the completion of several deals in portfolios contributed to their performance. On a negative note, CTAs and macro managers underperformed. CTAs were impacted by the rise in bond yields ahead of the September 21st FOMC meeting, as investors feared that the central bank may raise interest rates imminently, which did not take place. And in parallel, macro managers were impacted by the rise in the euro against the USD, having short euro positions that detracted, and they suffered at the end of September by the fall in bond yields as a result of their short duration positions on fixed income. Going forward, we think that Q4 is likely to be less supportive than Q3. We think that there are key political risks such as the US election, the Italian referendum on constitutional reform, and the environment is likely to be less supportive for risk assets. As a result, we have declined the implications for hedge fund strategies, downgrading long-short equity players to neutral from slight overweight, though we keep market-neutral long-short equity players at slight overweight, since this specific strategy tends to behave well when implied volatility rises. With regards to event-driven managers, we keep a slight underweight stance on special situation players. This sub-strategy tends to be impacted by market downturns, having an elevated beta, but we maintain merger arbitrage managers at slight overweight. M&A volumes continue to be strong in September, and this sub-strategy has adopted a cautious stance ahead of Q4, keeping cash in portfolios after the completion of several deals in portfolios and waiting for opportunities to deploy capital. So the set of opportunities for merger arbitrage players is elevated with strong M&A volumes, and the risks are limited due to their low beta against equity benchmarks and the fact that they adopted a cautious stance ahead of a critical Q4.